Yeah.
Yes, and-
I just want to point out, this is the tiniest half day. Starting a half year career.
I said the same thing.
Thank you very much.
We can't promise this every time.
Sorry, you feel like when this
It's a
started.
special occasion.
They literally make fun of me because I have two of them that are this high. We're not sure, but I'm pretty.
Listed, she can't make it.
Wayne's in the hallway.
Oh, okay, great, great.
I thought you actually liked me.
It's your spot right here, sir. He's like, no, I want it. Hi, how are you? Happy Father's Day.
All right, please.
We have to make our meetings fun. If not, forget it.
All right, we are gonna call this meeting to order and I'm going to just take a few minutes as prerogative of the chair to wish Kathy Allen a happy birthday. I know she's celebrating overseas. And I did want to introduce one of our advisory members to our investment committee. We have John Ulrich joining us today. So Brett, can you take the roll, please?
Line Commissioner Stephanie Garcia Richard.
Here.
Treasurer Laura Montoya.
Present.
DFA Secretary Wayne Props. Present. Nick Teas. Catherine Allen.
Yes.
John Bingaman.
Present.
Kelly O'Donnell. Alan Sanchez.
Present.
Kurt Summer. Present. Mary Roman.
Present.
That's 8 in the affirmative. We have no.
Thank you. Next, we'll move to approval of agenda item 1B.
Move we approve the agenda. It was on.
Okay, we have a motion and a second. Discussion. Hearing none, let's take a roll call vote to approve today's agenda.
Commissioner Stephanie Garcia Richard.
Yes.
Treasurer Laura Montoya.
Yes.
DFA Secretary Wayne Props. Yes. Catherine Allen.
Yes.
John Bingaman.
Yes.
Alan Sanchez.
Yes.
Kurt Summer.
Yes.
Mary Roman.
Yes.
Stating the affirmative, motion passes.
Okay, next, approval of the minutes from the May meeting.
Move we approve the minutes from the May 26th meeting as presented.
Second. I'll second it. Okay, we've got a motion from member Summer, second from the treasurer to approve the minutes from May. Any discussion? Hearing none, we'll take a roll call vote, please.
Commissioner Stephanie Garcia Richard.
Yes.
Treasurer Laura Montoya.
Abstain.
DFA Secretary Wayne Props. Yes. Catherine Allen.
Yes.
John Bingaman.
Yes.
Alan Sanchez.
Yes.
Kurt Summer.
Yes.
Mary Roman.
Yes.
7 in the affirmative, motion passes.
All right, let's turn it over to our state investment officer, Mr. Clark, for his remarks. Item agenda 2A.
Great, thank you so much, Madam Chair, members. Going to keep my remarks brief today. I'd like to start by officially welcoming our new Chief Investment Officer, Kristen Varela. First female Chief Investment Officer, yes.
From
And,
New Mexico.
yep. Yeah, this is a wonderful homecoming story. For anyone who's not aware, Kristen is a native New Mexican, and she started her finance and investment career here in New Mexico. She ended up having to leave New Mexico to pursue her career, and she wasn't looking for another option, but we reached out to her as part of the search process for the CIO. And in her words, when home comes calling, you pick up the phone. And so this is just a wonderful way to welcome back home a New Mexican who is able to continue their career here in New Mexico and hopefully finish out her career here. But yeah, so we're really, really happy to have Kristen on board. In addition to that, just wanted to let members know, we last week had a great meeting with one of our venture capital funds and some of their portfolio companies. They brought representatives from about 10 of their portfolio companies into town to meet with us. They are all considering coming to New Mexico, which is really exciting. It's a variety of companies, but a lot of them focused on advanced energy or deep tech. As part of that meeting, we also had a few key legislators there from the appropriation committees, and in their remarks, they made it clear that it is a very high priority and an ongoing priority for them to make sure that they are supporting an environment here in New Mexico that is suitable for us to build those companies here and recruit those companies here. And they are actively looking at what they can do in the next legislative session to support that. So really excited that we are anticipating continued support from the legislature on this. We also posted our first social media video on our web channels on LinkedIn and Instagram. This is the expansion of our social media presence on the internet. We realize that this is very new for us. We welcome feedback, but we also anticipate this being the start of a video campaign through social media because that is a lot of how a lot of people consume content. And we think it's the best way to reach out and explain some of the topics of how we do what we do, why we do what we do.
And then we're gonna have an SIC game.
And we're gonna have an SIC game.
Well, gaming is also helpful.
Oh.
Interactive content.
Yeah, we can work on that. We'll talk to the team. Maybe the game could involve how you take a dollar from oil, how it goes through the state land office, and then comes through the SIC. And then just wanted to also note we have interns for the first time in our history, and Helen's going to talk more about that, but really excited to welcome them to our office. We have a couple now, and we're getting a couple more next week. So very excited about that because that's part of the process of what we're trying to do of building a New Mexico team. We both are recruiting experienced professionals back, but we are also trying to grow from within. So with that, Madam Chair, happy to answer any questions.
Council questions? How has the first couple of weeks been in recent?
It's been fantastic. So it's an honor to be here. I'll have some comments a little bit later in the agenda, but when home comes calling, you answer, and it has felt like home. So the team is wonderful. Our conversations have been really, really meaningful so far. I have a lot to learn. And I see how we all can add so much value as we go forward. I'm really excited to be here. Good.
Yes. Let's now move to hear from our chief of staff.
Thank you. Good morning. Before we begin, I would like to recognize and thank our HR manager, Kevin Dominguez, for the tremendous amount of work he has put into developing our internship program. This is something that Kevin and I first discussed during his very first interview with the agency, and it's an initiative that both of us care deeply about. As products of New Mexico's public school system and graduates of New Mexico state colleges, we are personally invested in creating opportunities for young people to learn about public service, investment management, and the many career paths available at NMSIC. Today, I'll provide a brief overview of our 3 internship programs, and then we'll have the opportunity to hear directly from our 2 high school interns as they introduce themselves and share a little about their interest and experience. NMSIC is proud to partner with Santa Fe Public Schools through its work-based learning program. We are grateful for the contributions of our interns Ying Chen, and Melanie, whose professionalism and dedication have positively impacted our organization. A special thanks to Jose Villarreal, Director of the Work-Based Learning Program, for his leadership and commitment to creating valuable opportunities for students. We are excited to participate with the Girls Who Invest program, which is dedicated to increasing the representation of women in the finance and investment industry. We are pleased to welcome Talon Watchman, who will begin her internship on June 28th, and look forward to supporting her professional development with this important initiative. A special thanks to the Treasurer's Office for introducing us to the program, and to Ashley Tyson of Girls Who Invest for her guidance, support, and partnership throughout the process. We are also partnering with the Investment Talent Development Collaborative, IDA, an organization dedicated to expanding access to careers in investment management and finance for talented students attending state universities across the country. We are excited to welcome Santiago Treviso, a New Mexico State University graduate, who will begin his internship on June 30th. A special thanks to Sasha Talcott of KKR, as well as Jay Washington and Sharmila Kassam at IDA for their support in helping connect talented students with meaningful career opportunities in the investment industry. And I'll now pass the floor over to our high school intern.
And I'm wondering if you all would join us.
Yes,
Yeah,
please.
come on up here. I know, I'm so sorry, maybe they didn't warn you, but we are hearing from you officially, so yes. We didn't talk to you over here. I know, so.
Yeah.
Good afternoon, everybody. I hope you're all doing well, but it's morning.
It's still morning.
Yeah, but I hope you're all seated well. My name is Yang Chen Sherpa Glenn, but you can call me Yang for short. I am a senior in Mandela International Magnet School, and I plan to pursue a career in finance and data science in the future. I chose to join the SIC for my internship because I wanted to gain a greater insight into what the investment council really does and how much it affects the lives of New Mexicans. And as I did my research, I found more and more, and it intrigued me because the SIC plays a background role that not a lot of us know about, a lot of the citizens don't know about. And I think that it's important that everybody knows how much the SIC provides for us as as a student myself, they provided so much for the public schools, and I am very happy to work with them in my internship.
Now, can I ask you a question?
Mhm.
Do you plan to go to college, I'm assuming? And so are you looking yet at colleges?
Yeah, I already have a list of colleges, and I plan to go out of state so that I can, get a better education as well. I don't know. Exposure to the financial.
I think everyone should leave. At least once. Yeah, nice, okay, thank you.
Alrighty, well, good morning, everyone. I am a rising junior at Capitol High School. And I'm very interested, as well as learning more in finance and possibly other departments such as operations. So that's what I'm looking forward to continue learning during my span of the internship. And today I'm interested in seeing how obviously the meeting is operated and how you guys make decisions going forward. And yeah, I'm very grateful to be here, so.
So were you all able, and I'm assuming you're looking at college as well, but you're a
course.
junior and you're a senior? Or
Yes.
okay, have you started thinking
Yes.
about where you would like to go?
I would like to stay in state. I really am connected to my community here in New Mexico. So that's why I also would want to also observe how government works here too, just to see any possible opportunities in the future.
Well, I actually left for college, so don't. It is good exposure, we read about that, so congratulations to both of you. I'm wondering if you got to sit in on the investment committee at all?
No, I did not. I was in a conference.
Oh, okay. All right.
I did.
You did?
Yeah.
Good, because that's really where the rich conversations happen, but I'm glad you got literally rich. Right, are there, does anyone else have comments for the interns or?
I have a couple of comments, not directly to you, but congratulations, SIC is awesome, and I'm happy that you get to be a part of it. I know I might have mentioned this before, but I'm gonna mention it again because I loved it and it still motivates me every day. The Cultivating a New Wave of Financial Leaders that we had at UNM, that was a partnership with UNM and NMSU, was awesome. We had Don, Greg, and John from here, ERB, Para, so the two pension funds, and then Marquita Russell from Mortgage Finance Authority, as well as state personnel talking about internships, talking about being financial leaders as young people, and we're working on a collaboration between, because of the accreditation aspect, UNM and NMSU to partner on some type of certification that will then help them with that bridge into state government or potentially later county and city. Because we are in such a desperate need of so many different financial positions within the state. And so since then, they have interns, Girls Who Invest is gonna be interning with SIC. I have one coming in next week as well. We have one high school intern and one college intern that we just started. And so I know Para and ERB are looking at it too, but this is a great start for us to continue working with our young people. The outmigration numbers in New Mexico are so high and we're losing our really wonderful talent to other states. And so for us to bridge that gap and be able to teach them, this is the first component. And then of course, financial literacy is a requirement, which we call financial fitness. And then hopefully K through 12 is the main goal. So I love that you guys are doing this. I think it's super important. Gain as much as you can. The one thing I would have said is make sure you get your reference letters from people that make sure they get to know you. So it's valid, because I know I won't sign a reference letter without actually knowing the person, but you have so many people that are amazing in New Mexico that lead the second largest sovereign wealth fund in the country. But I'm not gonna stop saying that. So thank you, Madam Chair. And happy Father's Day to all the fathers out there. Wanted to wish you all a happy Father's Day. All right, so
Thank you. Yes, that concludes.
well, we appreciate you all being with us. Thank you.
Thank you.
Next, we're gonna turn it over to RBK and Mr. Carbonino for our performance report.
Morning. I'm gonna save my comments for afterwards, so I'm gonna turn it over to Marcia and Matthias.
Thank you, Madam Chair. Morning, everyone. Thanks, Nino, for introductory remarks. We do have your people flash report in the packet. I know it might feel a little bit dated given all the activity that's happened since. It's been a little bit of a wild roller coaster ride. Really, the first half of this year, and we're very close to the end of the fiscal year. So it's been a lot of excitement and a lot of volatility, as you might expect. The non-quarter end months, as you know, don't include the private marks, so we tend to focus on the publics. We'll of course have those updated marks in future reporting. If we can turn to page 10 of the meeting materials, this is our one pager that provides a little bit of an overview of all the economic indicators and the action that been driving markets for the most part. In subsequent pages, again, as you know, we've revamped this over time. There's more detail on the various asset classes to the degree that's of interest. I would just make a few comments on some of the highlights. As we know, March was tough and certainly brought the first quarter down, even though it started off well. April came back in force, and in fact, was one of the best months in 4 years. So that reset the course for Q2, and we've since seen very strong returns into into Q2. April was up double digits for most equity indices, non-US even better. And emerging markets led the way due to both the benefit of some of the AI that has happened in the US and particularly in Asia continues to provide some forward momentum. We do have a new Fed chair, and as you know, the Fed tends to have a dual mandate of full employment and managing inflation. The labor market is quite healthy. You can see that on our economic indicator table on the left, around 4%. But more importantly, the new weekly claims is actually decreasing. So it's a low number, low starting number, but we're not seeing a lot of momentum in terms of right sizing. You'll recall that inflation was ticking up, or unemployment was ticking up as tech companies and others that tended to overhire as part of the pandemic were right sizing their personnel and staffing. But for the most part, that's in a good place. But we've seen inflation tick up again. And so again, there's a whole metric or a whole section of metrics to define inflation, different ways to look at it. But irrespective of how you define it, inflation has been increasing again. And that's probably the bigger area of concern on a go-forward basis. You're well positioned for inflation. You have lots of real assets. You have assets in the portfolio that tend to do well when inflation kicks up. Inflation in and of itself, not necessarily a bad thing. Again, especially as your position, it's when growth starts to fall off and you have the potential for stagflation. We've talked about that potentiality for a number of years. That's when things get a little bit more challenging. But again, for the current environment, you're well positioned. The reason I mentioned that is because we also, as I said, have a new Fed chair. There was an anticipation of additional rate reductions at the beginning of the year. That's really gone completely out the window at this point. You may actually see rate increases in the future to bring inflation under control, especially since the labor market appears to be reasonably healthy. So first meeting was last week of the new Fed chair, as expected, largely no change, but that's something to keep an eye on. And if you ever want to take a look in terms of where market expectations are, that's that bottom right hand side in terms of rates going up or down. But those are probabilities in terms of changes. And you can see the view currently is that there will be no change for the next few meetings. And although again that could change, but likely would head in the direction of higher rather than lower if I had to make a wager. Not that we're in the business of doing that. You have excess cash that has continued to be put to work by your staff. They've been working very diligently there. That's of course very helpful to get you closer to your policy allocation and is important as inflation increases because your real yield differential between what you earn on cash and what inflation is has compressed. And so that's something that I think your staff has done a great job at and is continuing to work on. And I know your new CIO is very committed to getting us to the policy allocation as expeditiously as is prudent. So that's something to keep an eye on just the story we've talked about, that the cash needs to be put to work, but you can be a lot more patient when inflation is much lower than what you're getting on those cash reserves. That has changed. And so the timing is very important there. In terms of what has happened since April, because again, as I said, that feels like a long time ago, markets have just been really on a tear, obviously up and down, but by and large going higher. Emerging markets leading the way, up about 30% just for the quarter alone. We'll see. We're near the end of the quarter, but I suspect fiscal year for the funds will easily end in the teens. So it'll be a really strong fiscal year across your funds. But again, these assets aren't managed by a fiscal year. It's just an arbitrary point in time. We want to make sure we have a strategy for you that is going to perform through market cycles. So I'll pause here. Probably take questions at the end, and Marsha's going to provide you some detail on the portfolio results.
Yeah, let's go straight to Marsha and then we'll take questions.
Thank you. I'm going to take you to page 13, and as usual, we'll start with asset allocation. On page 13, 88% of the assets that New Mexico State Investment Council has purview over is on this page. So the three funds, land grant, severance tax, early childhood, make up 88% of those assets. Also, these three funds are the funds that continue to have interim target allocations. The interim targets are shown in column 4. Your long-term targets are in column 8, and you have a ways to go. The notable takeaways from this page in the allocation is that your public equity is at target and actually slightly above target, at least as of April, and probably continues, I'm sure it continues to be. Your private assets are under your interim target, so further away from your long-term target. And just the story there is you have cash coming in. You have a high-class problem, right? You have a lot of money coming in, and it takes a while to get those private assets into the market. You commit and it's called, but you keep getting more money in. So notable takeaways there. So where is that money that is committed or hoping to be committed in this allocation? You'll see, and you'll recall that you've suspended your minimum and maximum target to public income, fixed income, and that's where you'll see your overweights to public fixed income and cash. The cash has been brought down some, but your public fixed income is well above your target allocation. If we go to pages 14 through 17, those are the remainder of the funds. I wasn't going to go through each of those, only to say that each of those funds are at their long-term target or very close to their long-term target within their ranges. And also want to note, if you look through these funds, that you'll see cash is, there's not a lot of cash in these funds. I know that the highest allocation as of April was the higher ed fund at 0.5%. Most are well under that. So cash has been brought down, and your long-term targets for the remainder of the funds, except for the first 3 we discussed. On page 18, looking at your investable assets, and this is looking at the total. So the top line is the total. At the end of March, you're at 70.3 billion. At the end of April, you're at 73.2. So just over that month's period, you had a 4% increase since March. I also want to point out on this page that you can see the listing of all the funds, but there's another line there. It's actually the 5th largest amount of assets, and that's to your external clients, the ones that use your pooled funds. The council doesn't have any control over the asset allocation there. They make their own asset allocation decisions, but you have allowed them to use your pooled assets. The external clients are over 3 billion now, and that makes up as of April, 4.2% of the total assets that are under your purview. Next, I'm going to go to page 20 and we'll look at performance. This is an April report, as Mattia said, that seems like ages ago. Lots has happened. But for the month, you'll see of April, you'll see very good performance. A few of the funds, 5 of the funds had very slight underperformance relative to their benchmark, but overall good returns on an absolute and relative basis for the most part. Calendar year to date, all of your funds outperformed their benchmarks. And fiscal year to date, all of them outperformed with the exception of the 3 largest funds, again, that are not at their long-term target, but do hold more fixed income and cash. But at this point, I want to remind you that each of these funds fall into 5 allocations, ranging from high growth to stability focus. So over that time, we've provided you the matrix, and I think this matrix should probably be put in all of these reports as a reminder. But they fall within 5 target allocations. As an example, land grant is under growth. Also under the growth allocation is the conservation legacy fund, total fund, and the health, behavioral health target. Kristen pointed this out at the investment committee, and it's to show, if you go down the 3rd fund from the bottom, conservation legacy total fund, which is the same allocation target as the land grant, had the best performing fiscal year to date return of the funds at 12.05. So that is the allocation goal of the land grant. I just think that tells a couple stories, keeping in mind the long-term target. And again, your patience, you're getting there, but it's gonna take some time.
And Madam Chair, if I may add just on that point, I think it's also very important that that be something we focus on, trying to get to risk profiles that more appropriately reflect the council's overall goals and objectives so that we can participate in these growth markets. It is highlighting that when we say excess cash, it's actually all invested for the most part. Don and the team have done a wonderful job allocating that capital to short duration fixed income. So it's a nice parking space for right now, but it does show that there's a deviation in performance over time. And one of the primary goals of the team and for me is to get us closer to our long-term targets in a prudent way, of course, but sooner.
One other thing I'd like to point out on this page, the far right, you'll see something new. We've added at the request of your staff since inception returns the best that we can. You'll notice that under land grant and severance tax, we have since inception since January 1st of 1999. That's as far back as we can go with net of fees performance. And also we really, the benchmark, we don't have the data there to do a comparative benchmark there. So, but I think it's a great add to have the since inception numbers. And again, these are all net of fees.
All right, I know the treasurer has questions. Do you want to wait for Nino or?
Sorry, Nino. Only because we're talking about it right now. So, first question, how much cash do we have? Whether it's in short duration fixed income or not. I know at one point we were at about 80,000. And then the second question to that is how much of that is already committed? And I couldn't find it because the graph sort of shifted from what they used to have on that total.
Page 32 has the breakdown of the cash detail.
And Madam Treasurer, that would have been as of the end of April. The more recent would be in the investment holdings report, which looks like it's on page 188 of your diligence book. That shows as of May. And so the what's sitting in the cash pool, this is actually a land grant cash pool, is 1 billion. In terms of other cash and securities, we're sitting at roughly it looks like 687 million. And so that's down from roughly 5 billion or so. So we've moved quite a bit into those short duration fixed income assets to get a significant amount of it invested. If you look further on in the investment holdings report, you can see that for say land grant in its literal cash account, it's holding about 270 million. Now that is in addition to the treasurer's STO account. For severance tax, it's 15 million, which it was at almost $1 billion earlier in the year. So a lot of that has been moved over into that short duration fixed income, and then we'll be working with Kristen on how to better match those assets to.
And what page did you see the investment holdings?
This is on page 188. You can see for the total net assets, and then each page thereafter will have the individual funds. The three biggest funds that have been holding cash are land, severance, and early childhood. So you'll be able to see on their individual pages how much they're now holding, but you can see that it's down very significantly in terms of literal cash that is in those accounts. The rest we would now call excess capital. So amounts that are deviating from your targets that have yet to be invested per their asset allocation, but not being held in cash.
So how much in total is in the short duration fixed income that hasn't actually been deployed or approved to be deployed? Because I know that
it's about 4.5 billion.
4.5 billion. Okay.
Now, some of that is actually part of the asset allocations. So there should be some in short duration, just not that.
Okay, so that's a significant change from the 8 billion, 9 billion we had in cash before. The reason why I was asking is no one freak out. Just a thought to throw on the table is we're looking at what we're getting with Moody's and S&P, and I'm so thinking from that angle, and then on the pension funds. And having so much cash, would it make sense to maybe deploy some of that money to the pension fund so that they can also deploy cash? Just something to think about, but it all affects our ratings or potentially our ratings because of the unfunded liability that's on the pension fund side. So just something to put in the back of your guys' brain. The second question I had is on the asset allocation. I don't remember what page it was, but you have the target allocation and the asset allocation, but I don't see this side that says what we're exactly at right now. So where did that line go?
Okay, if you go to page 13, column 2 is the actual, it says asset allocation, that's the current allocation. Next to that is the interim, and then the fifth column is the difference between the current, which was current as of April, compared to the interim and the difference. So
Madam Chair, Marcia, so the asset allocation, for example, that's what our asset allocation is. The interim, are you saying that's where we're currently at with each one of these?
where you're currently at is the asset allocation. That is your current allocation as of April 30th was the 21.2 in US equity, 21.7 in non-US. So that's current allocation compared then next to that to the interim showing the difference. And then the last column is where your goal, where you want to be.
Very good, thank you. I was thinking that we were still trying to reach to it as a target to get to the asset allocation, and I didn't know that we've already surpassed it in some of the cases and moving downward, so that's wonderful, thank you. Okay, we're gonna hear from Nino.
So I'd like to build on RDK and staff comments, just to give you an update on the pacing presentation that I delivered a couple of meetings ago. During that meeting, we talked about a backlog that had been building. So essentially, these were commitments that had been made, but had yet to make a capital call for investments. If we look over the last 5 years, that amount has grown from 1 billion to 8 billion. And so one of the things that we talked about was that there's significant pent-up demand for our capital that's not currently reflected in our NAVs, but that appears to be changing. So year to date, we've had 41 commitments that have made their first capital call for investments, representing $4 billion. So roughly half of that backlog. And what that means, one of the things that if you take a look at, historical drawdown rates, which actually hold up, very well over time. Typically you'll look at a fund will draw down 25% each year for the first 3 years. So what that means is that, we would essentially have or expect 1 billion of net cash outflows each year for the next 3 years from these 41 commitments alone. If we take a look at just across the private asset class portfolios, we've had very strong net cash outflows year to date. In the first quarter, we had just under 1.2 billion in contributions. That's the largest that we've ever had for a given quarter. That record didn't hold very long because second quarter to date, we've already surpassed that. And we're a little over 1.3 billion in contributions. And so, year to date, we're looking at contributions of almost $2.5 billion. Distributions have been 900 million. And the net cash flow there is net cash outflows of just under 1.6 billion. And so when we see when we're reporting on the private markets, one of the things that we'll see is an increase in the NAV, approximately a 7% increase in net asset values kind of across the private asset classes from cash flows alone. And then performance would, of course, be on top of that. I'm happy to answer any questions.
I know we have a question from Secretary Host.
Thank you, Madam Chair. For Marcia Bayes, kind of a multi-part question. Which concerns you more, a recessionary scenario or a stagflation scenario? If you see a difference, and what would the impact of a recessionary scenario versus a stagflation scenario be on our portfolio? Again, if there would be a difference, and I know there's a lot of variables, how severe a recession, et cetera, but what's the difference?
Yeah, maybe I'll take a first stab at this, and then Marshall and Lula can add to it. I would say that upfront, just sort of level set, SIC is in a very unique position, given the long investment horizon that you have, that a pension fund, for example, doesn't have, that is much more susceptible, much more exposed to the type of economic risks that you're describing, both whether it's recession, broad, or stagflation, which to me it's a recession plus, right? Less GDP growth, less growth, but with the added dynamic of having out of control inflation, which is very, very difficult to invest through, as I mentioned. The very few assets do well in that. So again, you have a lot more flexibility in terms of that. You also have the benefit, again, stagflation is a nightmare for most investors. You benefit from having two sides of the ledger. You have inflows that are funded by oil and gas, which are directly tied to an inflation environment. I know that's a little bit of a paradox in the state, because it's painful for most, but it's actually a tailwind for the SIC. And so I would say that you are uniquely positioned to actually weather that storm pretty well. Because even though your investment portfolio might come under pressure, even though, again, as I mentioned, you have you've been very deliberate to position yourself for a stagflation environment. You have real assets, you have real estate, you have infrastructure, you have all these different assets that tend to do well. Plus, of course, stocks, which tend to not have the sort of immediate relationship or correlation to inflation, but over time tend to out-earn inflation. So you're well positioned there, but then really, even though let's assume that your financial or investment portfolio came under pressure, your inflows should come up meaningfully and offset that. And so that's why that, coupled with your long investment horizon and your spending policy, which is sort of a moving average, right, of a trailing NAV, also builds in a tremendous amount of flexibility. We work with other sovereign wealth funds that can only spend realized income and gains, which if there's a bad year, there might not be any money to spend. In fact, I've had some states that had exactly that scenario. They had no money to spend and had to create a session and rules to sort of circumvent that. But and lots of lessons were learned out of that. You need a reserve in those instances. But again, SIC has been very forward thinking in that you're not beholden to a corpus that could be violated. You have a very long run. You're essentially running like an endowment foundation in the public sphere, which is just giving you all the tools to manage that difficult environment regardless. So I would say depends on sort of who you are. For the SIC, I think you're as positioned as best as anybody. And so maybe with the inflow component benefiting, stagflation might actually be a little bit easier for you. The recessionary situation, and you've seen the breakdown of fixed income, not always 2022, for example, and even more recently, where fixed income and equities could just move in tandem and not provide you that offset that historically you've come to expect. So I think that for most would be quite challenging, but again, I think you're reasonably well positioned to manage through that.
Thank you, Madam Chair.
Further questions? All right, thank you all. We're now moving to our investment matters, part of our agenda, and we will hear from our investment committee chair, Member Bingaman.
Madam Chair, thank you very much. We did have a meeting of our Council Investment Committee last week. We were all happy to welcome our new Chief Investment Officer to that meeting. We reviewed a really informative presentation from Mr. Carpenito on ways to evaluate private fund performance. That is not in the materials today, but members can access that on Diligent in the CIC materials, and that covered some of the metrics that you hear about these private funds, like DPI and TVPI and those sorts of metrics that we use to evaluate those funds. That was purely informational, but got a lot out of that. We also reviewed the two voting items before the council today, and we unanimously recommended approval of each of those items.
Thank you. So we'll move now to those items. Agenda item 3B, an investment consideration into Alpine Investors Heroes 1 and a co-invest vehicle. This is a new relationship with the State Investment Council. So I will turn it over to Director Cassidy.
So this is a recommendation on the buyout side for the national program. When we look for buyout managers, there's kind of some kind of core principles and kind of the kind of managers that perform well. They have some sector expertise, they have large operational teams, and they often do add-on acquisitions or other types of transformative things to increase the business and improve its profile. And Alpine kind of meets all three of those. They have a focus on particularly labor intensive services. So these are things called field and professional services, things like plumbing and HVAC. As examples of the kinds of businesses they target in industries that are very fragmented. There's an opportunity to buy a business and serve their talent, which Richard and them will talk about, and build a larger business by buying a bunch of businesses, smaller businesses, and adding them onto a larger platform. The Heroes Fund specifically is intended to increase that journey with some of these businesses where they think their main fund goes, does the journey to a certain point, but they think some of those businesses have the opportunity because of such fragmented sectors to keep going a while. So Heroes Fund plans to invest in roughly 4 to 6 companies. 2 of the investments have already been identified, which will be roughly over half of the fund. These are businesses they think they can keep compounding in terms of add-on acquisition over time. So that's what this fund's set up to do. The reason it's a smaller commitment in the main fund is because it's a more concentrated portfolio. But we also like the fact they're setting up one-to-one co-invest, so it's also a efficient way for us to access this strategy. That's all I need to say. So that's it.
Thank you, Chris. Thank you, Madam Chair. Yeah, as mentioned, Alpine Investors is a new relationship, but it's a relationship we've been pursuing for multiple years for the SIC. The firm was established in 2001 and focuses on software and services, although in recent years, they've been focusing more on services investments. The firm continues to be led by 4 founding partners and has 3 additional partners. And what we like is the partners average 16 years working together at the firm and 19 years of relevant investment experience. And this firm has a lot of resources. There's a 50-person investment team, a 16-person sourcing team to go try to find new companies. And in addition to the investment team, the firm has the Alpine Operations Group, which is a 54-person team, which provides a range of services to portfolio companies, including product development, marketing, talent acquisition, M&A support, and technology integration. Alpine's generated a strong track record across its funds, with the vast majority of the most recent funds having performance metrics ranked in the top quartile against the NMSIC North America buyout benchmark. The overall strategy at Alpine really focuses on installing the right Alpine trained leaders into portfolio companies and executing on a value creation plan for internal improvement. And then also using that add-on acquisitions to build a better company and strengthen a company's strategic position in the marketplace. The Heroes Fund is a new strategy that broadens what the firm has been doing by supporting Alpine's highest performing companies. The fund is expected to be concentrated, as Chris mentioned, which went into the sizing of the commitment. Since Alpine does own these companies, there will be third-party support on valuations to mitigate conflicts. And the first 2 investments have been identified, so there will be a relatively quick draw on the commitment if approved. From a terms perspective, they are more favorable than what you typically see with the buyout fund. GP commitment is above market as well from what we typically see.
What pages on terms on?
They are on, there's a term sheet. So
66.
41, 42.
See. Couple places,
It's,
C6.
Thank you.
yeah, that's this one, 66, the summary. So we're recommending a $50 million commitment to the fund. We're also recommending a $50 million commitment to a sidecar co-investment fund that's fee-free. And Madam Chair, I'll turn the time over now to the Alpine team. We have 2 members here and one on the phone as well.
Great. Thank you so much for having us. Our colleague Mark, who is on Zoom, will start us off.
All right, well, great. I hope, can you hear me okay?
Yes.
Okay, great. Well, thanks everyone for your time today. We're thrilled to be here just on behalf of Alpine to tell you more about this special firm that we have built and, incredibly honored to potentially have an opportunity to partner with the New Mexico State Investment Council and the important work that we know that you do. My name is Mark Strauch, and I'm a founding partner here at Alpine and a former multi-time CEO of middle market businesses like the ones we invest in. As you heard, Alpine is a San Francisco-based private equity firm founded in 2001. We manage approximately 19 billion of assets under management with a team of 145 people. Everything we do at Alpine is guided by 3 overarching goals, which we call our North Star. And we designed our North Star years ago to be specific and tangible for obvious reasons, but also stir the soul for what we are deeply passionate about as a team. And those 3 goals are, number 1, to make Alpine a top destination for exceptional people to spend their careers. Number 2, to endeavor to become the best performing private equity firm of our generation. And number 3, to be a force for good in the world and in the communities that we operate in. So I'll just take a few short minutes here to explain our strategy in a nutshell before handing off to Courtney and April, who are with you in the room. They'll share more about our team and our track record and the Heroes Fund specifically. So as you've heard at Alpine, we invest in both software and services businesses that are generally operate in large fragmented markets that are characterized by high levels of recurring revenue or reoccurring revenue, tend to be mission critical businesses, asset light, and recession resistant. That's been our scorecard for many, many years as we evaluate investments. And although we're in both software and services, I do think it's important to point out that we've intentionally skewed quite heavily over the last 5 or so years towards the services investments at Alpine. I think when you get right down to it, what really differentiates Alpine is something we call our people first approach. And people first is our overriding philosophy as a firm, and it also drives very directly our investing strategy. So we believe that exceptional businesses and investment outcomes are principally built by exceptional leaders in those businesses. And we invest heavily and have for many years in identifying, recruiting, assessing, and developing that leadership talent. Through our CEO in residence and CEO in training talent programs, it's often the case that we identify the leadership team for our investments even prior to identifying the company that we're going to invest in itself. And today we have more than 100 Alpine-backed leaders active operating across our portfolio. Our people-first approach has also led to a very specific operating playbook that you heard touched on that we run in every one of our portfolio companies. We create value through this repeatable playbook, which is centered on 4 main areas. Number 1 is leadership talent. As I mentioned earlier, this is really the most powerful starting point to unpack everything that follows. So leadership talent is the first of the main areas in our playbook. Second is organic growth. We focus a great deal on the organic vitality and growth of a business to a next level of success. Third is operational improvement, really the professionalization of businesses to take them to the next level. And then fourth is add-on acquisitions, where we are very, very active. So to give you an idea of the power of that add-on model, in 2025 alone, we completed 185 add-on acquisition running the same playbook. So just at a high level, hopefully that gives you kind of a flyover of our strategy and what we think makes this focus not just effective, but very distinct in private equity. So Courtney, let me hand it over to you and April to talk more about the team, the track record, and the Heroes Fund.
Thanks, Mark. Hi, everyone. My name is Courtney Bond. Thank you so much for having us today. One of Alpine's greatest strengths is the continuity of our team. Our 11 partners have worked together for, on average, over 13 years. This year marks our 25th anniversary. And over the last 25 years, we've built a scaled team with dedicated functions across investing, sourcing, talent, value creation, finance and operations, capital markets, and investor relations. And we think we have the right people in the right seats to not just deploy capital, but also support our portfolio companies. In terms of track record, across our mature funds, we've consistently generated strong performance relative to private equity benchmarks. We believe this is a direct result of investing behind great people, maintaining a consistent strategy, and executing a repeatable value creation playbook over time. I'll now pass it over to April and talk a little bit more about the Heroes Fund.
Thanks, Courtney. Hi, everyone. I'm April Smith. I'm a partner at Alpine, and I lead our investor relations and fundraising team. Alpine is currently fundraising for Alpine Heroes Fund 1. This fund is designed to invest in a select number of Alpine's highest conviction assets to support their next stage of growth. These will be businesses where we get a number of key things right, including the right market, the right management team, the right organic playbook, and the right inorganic playbook. The fund allows us to continue supporting these businesses after they've outgrown or they've outlived the flagship fund. And it provides investors access to a portfolio of businesses that we know exceptionally well and that we have really high conviction in. And as mentioned previously, this fund will also offer co-investment opportunities alongside the fund. So we're very grateful to be here today. We thank you all for your time. And we are excited about the opportunity to hopefully start a long-term partnership in Mexico.
I have a question, but I don't really know how to ask it. So it says here that the carry is distributed to all Alpine employees. I don't think I've ever seen that one. And what do you mean by all?
Yeah, it's distributed very broadly across the firm. So we really believe in incentivizing our employees to make sure that they want to stay at Alpine for a long time. And we found historically the best way to do that is through distributing carry broadly. So that includes some of our executive assistants, office managers. It's not just the investing team or sourcing team. It really is.
Madam Chair, when we are underwriting managers, and I'm sure Chris can attest to this, this is a strength in the culture of the organization.
Is that a common thing that people do?
It's not very common. So this is a unique and I think a highly aligned and favorable term.
But if you look under the hood in our portfolio, a lot of our largest positions are what we call classic partnerships, where there's no outside ownership. So all the carry fees are going to either build the organization or to the people actually producing the value of the organization.
Well, producing the value, I mean, all 200 employees at the state land office are responsible for the, okay?
Well, I'm just saying, in the better firms, it's distributed across the organization, not just to the most senior.
That's
true. I'm sure versus, just going down to maybe like the senior level.
Yeah, no.
That's kind of the alternative. So it's a strong alignment point in our report.
It gives us more conviction and retention, the culture of the organization, and just overall health of the investment strategy.
Questions?
Just out of curiosity, Madam Chair, Ms. Bond, you mentioned performance and that it's been great through the course. Can you go a little bit more in depth about that?
Of course, we seek to generate a 3x net return across our funds. And across our more mature funds, we are very proud to say we've either achieved that or on path to achieving that.
If there are no further questions, do we have a motion, Mr. Chairman?
Yeah, Madam Chair, I'm happy to offer that. Based on the recommendation of the Council Investment Committee, Advisor Mercer, SIC staff, and fiduciary oversight of RVK, I move that the State Investment Council approve a commitment of $50 million to Alpine Investors Heroes 1 LP and an additional $50 million to the fund's no management fee, no carried interest co-investment vehicle, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second. All right, we've got a proper motion by the chair, a second by the treasurer. Any discussion on the motion before the council? Hearing none, let's take a roll call vote.
Commissioner Stephanie Garcia Richard,
Yes.
Treasurer Lori Montoya,
Yes.
DFA Secretary Wayne Props,
Yes.
Catherine Allen, John Beattyman.
Yes.
I got her too. Yeah. Alan Sanchez,
Yes.
Kurt Summer. Yes. Mary Roman.
Yes.
That's eight in the affirmative, motion passes.
Next, we'll
Welcome to the SIC family.
we move to agenda item 3C and consider a top up in the Menlo Venture Select Fund. Back to Director Marshall, or sorry, Director Hess.
So I wanted to make some comments before this to talk about venture capital generally at the SIC. Menlo Ventures was the SIC's first venture capital investment in the national program in roughly 20 years in 2020. Venture is a unique asset class. You kind of don't know when innovation cycles and amazing companies are going to be created. And so, 2020, we were kind of the tail end of the last innovation cycle, which was software and crypto and Web3 and all these things that are less desirable probably today. And in November of 2022, ChatGPT, which is the model of OpenAI, which most of it came out, really is the beginning of a new innovation cycle. There's other companies in that space you're probably familiar with. Anthropic is one of them. Their model is called Claude. Probably most of you are familiar with Gemini from Google, which came out of their DeepMind division. And then there's something called Grok, which is XAI, which is merged into SpaceX, associated with Elon Musk. But Menlo at the tail end of their fund, because they paced relatively conservatively, in 2023 led a round or put capital into Anthropic, which is the producer of Claude. And so, that really has kickstarted. There's good new experience in venture capital for our program. As of December, the commitments of the national program have a net IRR of roughly 18%, which is kind of what we want to achieve. Menlo specifically has been a roughly 24% net IRR through December. We expect those numbers to go up, given what's described in Anthropic. And on the strategic venture capital side, we really kind of changed the strategy of that program at the end of 2022 with our commitment to Frontier Fund and Roadrunner. One of our goals that's been unspoken, we haven't, and we'll bring this out next meeting when we talk about March performance, but one of our goals is to basically make up for all the historical losses in the program. The legacy program has lost around $146 million is our estimate as of March. The new program as of March is we're currently tracking to a 32% net IRR and $181 million net gain. So got over the hump of making that money back. So we're really excited. And part of the reason We'll talk about it with Menlo, is we're starting to see power law outcomes in venture capital. So last year we committed 90 million across 3 Menlo funds, the early stage fund, which is our third commitment with them, what they call their inflection fund, which is their mid-stage fund. That was our second commitment with them, and a vehicle called Select, which is intended to co-invest in AI deals across both of those funds. We've split it across all 3. The Select fund has a better terms and conditions, which we'll talk about. What they've decided to do is put just under half of that fund into Anthropic. Anthropic is turning out to be one of the fastest growing companies in history. It was when they invested in 2023, it was pre-product, really pre-revenue. In 2024, at the end of the year, they had about roughly $1 billion of annualized recurring revenue. At the end of last year, it was roughly $9 billion. This is all public. But depending on which podcast you listen to, it's already at 40 to 50 billion as of May. And so they just raised capital at $965 billion post. To give you some sense, Menlo's first investment was at 4 billion 3 years ago. It's 3 years ago. It's kind of never seen anything quite like it. The company, that was the pre-IPO round. They filed confidentially to go public. Given how fast it's growing, and I think it'll probably be a very sought after IPO. The pre-IPO round had $1 trillion of demand for a $65 billion round. Menlo's decided to raise the hard cap from 400 to 600 million. This top up is just intended to increase our commitment from 20 million, from 30 million to 50 million, in order to take advantage of really what's the last opportunity to invest in this company. Several of our other managers did participate in this round as well. But at that 965 valuation, with our analyst Keith Flynn's help, our current estimate is it's about a 276 million position out of a roughly $7 billion total portfolio between the national program and the strategic venture capital program. So we don't think it's a big position in the context of the overall SIC. I think our largest public equity position is around 700-800 million, I believe, is the last estimate I heard on NVIDIA, I think.
Madam Chair and Director Cassidy, so we now have a few of our largest public equity investments approaching 1 billion. Just for
and so in theory, this IPO is based on the projections we're hearing, it could be a little, roughly in line with that or a little lower, but not a huge position, but it is our first and thankfully good investment out of this portfolio. Wish it was larger, but anyways, you always wish it was larger. So I'll let Richard talk about the fund and the term.
Yeah. So Richard, wait, and can you address, so he said something about the Select fund is actually split across. He said 50% around in Anthropic, and then what else?
Then other AI companies.
Other AI.
I'll talk to high level a little bit about what those other companies are. But yeah, I mean, just to step back. So in August, the SIC approved 30 million each to 3 Menlo funds: Menlo Venture 17, Menlo Inflection 4, and this fund, Menlo Venture Select 1. And just as a reminder, Menlo Ventures is the early stage fund that invests around the Series A. Menlo Inflection makes later stage, Series B or later, and then Select Fund focuses on existing Menlo-owned AI companies, where the fund can use its pro rata rights to make additional investments in the companies where there's no longer capacity in the other funds. With this fund too, the terms are relatively better than what you see with an average VC fund, both on a management fee and carried interest basis, and that's on page 148 in the materials if you want to view the term sheet on that. I mean, we do continue to like Menlo Ventures as a venture capital manager. I mean, they've been a sought after manager. I mean, when Chris says we wish for a larger position previously, I mean, part of that was it was a capacity constrained manager. We got as much as we could back then. Menlo as an organization, they continue to be led by 3 managing partners who average 30 years of venture capital experience. They have 58 professionals total, including a 7-member operational support team they call the Fuel Team that helps portfolio companies across various growth initiatives. When you look at this fund's particular strategy, it's focused on technology companies incorporating AI into products and services. And while Anthropic is going to be a dominant portion of this fund, they've invested in AI companies that target services for doctors, for nutrition care, music generation, voice dictation, and mathematical reasoning. So there are other companies in this portfolio that are strong, growing companies of Menlo that they've invested in subsequent rounds. From a performance standpoint, the early stage funds have performed well, with most of the funds since 2006 being above median. Chris mentioned this number, but I'll repeat. I think it's worth repeating again. Through year-end 2025, Menlo Ventures has generated a 24% net IRR, a 1.6 times net multiple for the SIC. We do anticipate that will go up because that doesn't include the new round of valuation of Anthropic, which is in the previous rounds. And so, I mean, this fund is a good opportunity to get more exposure to Menlo and Anthropic at a relatively better economics than what we see with typical venture capital funds. So we're recommending an additional $20 million investment in Menlo Select Fund 1, and happy to answer any questions the council has.
Questions? Hearing none, we have a motion.
Madam Chair, based on the recommendations of the Council Investment Committee, Advisor Mercer, SIC staff, and General Fiduciary Oversight of RVK, I move that the State Investment Council approve a follow-on commitment of an additional $20 million to Menlo's Ventures Select LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second. We've got a proper motion by the chair, a second by member Summers. Summer, singular. Is there any discussion on the motion before the council? Hearing none, let's take a roll call vote.
Commissioner Stephanie Garcia Richard.
Yes.
Treasurer Laura M. Montoya.
Yes.
EFA Secretary Wayne Crops. Yes. Catherine Allen.
Yes.
John Bingaman.
Yes.
Alan Sanchez.
Yes.
Kurt Summer.
Yes.
Mary Rona.
Yes.
Plan Commissioner, back to you.
No.
That's suddenly affirmative, motion passes.
All right, thank you so much. Next, we're gonna move to agenda item 4 and hear from our governance committee chair, Chair Allen. I'm so sorry.
Oh, Madam Chair, not a problem at all. Madam Chair, members of the council, it's wonderful to be with you. I can't reiterate enough how much of an honor it is to be here and be joining all of you. I'm really excited about the work ahead. As we enter into the 3rd week of me sitting in my position, I just wanted to give a quick update as to where we're at and what can be expected going forward. First, the last 2 weeks have really been around listening, learning, and getting to know the team. So we've been conducting one-on-ones with team members. Internally, we've been looking at portfolio reviews, and those are ongoing alongside our consultants. So really just trying to understand where the portfolio sits today and what areas for opportunity enhancements and streamlining we can identify. In terms of what you all can expect from me, I believe governance is one of the core fiduciary duties of this council. I believe that it is our job as staff to be able to give you the tools and the support necessary to have a strong governing framework. So I'll be really working with you all to determine what that is. We believe, or I believe, that a strong governance establishes strategic direction, a shared understanding of risk and return expectations, success measurements. So what do we all define as success and how does that look in our everyday outcome? And strong accountability for implementation decisions. So as we go forward, I will be reaching out to each one of you to conduct one-on-ones. One is just to get a better understanding of your individual priorities, information needs that you feel are being met or are not being met, as well as just any areas of additional transparency or information that you view as beneficial. What that will do for me and for the team is help us think about what's next. So when I think about our governance work that we have ahead, the first is to really ensure that we have a shared understanding of our portfolio objectives, risk return characteristics, and the risk appetite of the council. That will be done alongside your SIO, your CIO, your general consultant as we work toward building out a new asset allocation, which it is time for that. So it's a nice time to refresh that together. Next is to review our policy statements and identify any areas of enhancement. So we'll review our governance frameworks and policies together and evaluate opportunities for strengthening those documents that govern us in our everyday work. That includes just general policy provisions, but also areas for enhancement, such as responsible investing. I know proxy voting has already been a conversation, rebalancing mechanisms to really set expectations and policy at the council level. And then last is really identifying strategic goals. So together, I would like us to establish clear strategic priorities, define what those indicators of success are, and ensure that implementation remains in alignment with council's objectives. In terms of oversight of implementation as it sits today, we will take on a benchmarking exercise. So as a council, we'll work together to identify a solid benchmarking philosophy and ensure that our benchmarks as they sit today meet those goals in that philosophy. Next is we want to look at reporting. So this is a very sophisticated portfolio, and performance reporting is complex and sophisticated alongside it. We want to make sure that our reporting is transparent, digestible, and understandable, not just to the council, but to the public. So we'll work together to identify areas where we can be very, very clear in our measures of success and how we're achieving those. And then last is just education. We'll talk together about areas of opportunity for external resources educationally, as well as internal. So we understand what our internal processes look like and how we're conducting business. I'm open to any conversations around governance, but those are kind of the key strategic objectives that I'm focusing on in this first year of work with you all. Next, I will move into implementation, which is the work I do internally with the fantastic team that's here in place. So for me, it really is the teams here, and they've established and have been producing really exceptional results. They're doing wonderfully. There is progress that's already been made, but the work is not finished. So what we want to do is we want to make sure that our processes are as strong as our organizational philosophy and mission. And we believe that there's opportunity to formalize and strengthen our processes internally as well. So when I think about risks on an implementation level, I first think about market risk. What markets are we in? What type of risk profiles are we allocated to? And how do we measure that? What are our sources of return, risk, and overall outcomes for the portfolio? So I'll be working with our risk team to build out internal risk tools. Those resources are already here, but there's a lot we can do there to help truly understand what our market risk positioning looks like. Next is manager risk. As you all know, we do not invest internally, and managers are one of our largest risks in our portfolio. And so the portfolio is already being deployed very actively, as you all saw recently. We do have a team in place that's very rigorous in their process, but as we look at it, they're all very different processes. So the goal will be to formalize process across the organization and have very strong understandings of the types of questions we're asking, the deliverables we're giving you all, and the process we're running. As I'm assessing portfolios right now, we're looking for concentration risks, overlapping in exposure, portfolio or potential portfolio over diversification, how we can scale the portfolio better, and financial impact of manager allocations. So the team is working very closely with me to understand how each individual manager rolls up into the portfolio level. So in terms of selection and monitoring, key goals for us and immediate action points will be a unified manager selection framework that will be rolled out in coming months, as well as a unified manager monitoring framework. The team has been made aware of this, and we'll all work together to identify what's best. It will be repeatable, consistent, and the process will be sound across the organization. I think one of the best things we'll do with this is we will utilize external resources to determine if there's any areas of best practice that we might be missing as well. So with the portfolio of our size and our sophistication, we have access to the best in class allocators in the country and in the world. And we have direct access to talk to those individuals about their due diligence processes, what they look at, to continue to identify any areas of opportunity going forward. And then in terms of portfolio efficiency, we are challenging the team to evaluate complexity. We like complexity. It is a strong value add in the portfolio, but complexity should always be justified. So we want to make sure that when we are skewing into private markets, which are much more complex and much more expensive, that we see true value add there, and that we're going to continue to see long-term enduring value in the portfolio. We'll want to make sure that manager counts and allocation sizes are meaningful enough to tap into that value at the total portfolio level. And we want to seek strong partnerships with our highest conviction managers. So overall, we've got a lot of work ahead of us. The last piece is culture. So I've spent quite a bit of time meeting with the team, which is fantastic. And I don't think that it is a surprise to anyone that the AUM per FTE management here is on the brink of dangerous. This team is punching well above their weight class, and they're doing it very, very, very rigorously, but it's not sustainable. So long-term risks include capacity constraints, key person risks, increased operational burden, and potential avoidable errors. So the goal is going to be to hire, to staff up. We need to continually thoughtfully expand the team. And you heard some of our initiatives that have built out that local presence. We want to continue to tap local expertise as much as we can. But at the end of the day, we also want to find just the best in class. And what that means is a strong culture and working environment for the individuals who want to come join us. That means strong and competitive pay relative to our sovereign wealth plans and our competitors in the industry. And it means overall challenging and exciting work. So we'll be working to build out our recruiting initiatives to target first our local. We're gonna prioritize highly qualified local talent, and we want to make sure that there's meaningful opportunities for anyone who joins us. We want to build a diverse team. So I think SSC has done a wonderful job building out a more diverse team over the last two to 5 years or so. We want to see more diversity in skill, in gender, in ethnicity. We want to build a nice, broad, and diverse team within the portfolio. And then last is retention. Some of the best assets we have are not the managers that we're approving, they're the team that we have in place. So this team has worked very, very hard and driven very, very good results for the fund. And it's important that we continue to make efforts in progress toward getting them to strong compensation levels, giving all of our teams strong paths to professional progression so they don't have to seek challenges and progress elsewhere, and to really give them an organization that they can be proud to say that they're working for. So with that, I promise to you is in August, you'll see a work plan from me. I just threw quite a bit out at you. We'll start working together on governance, implementation, and culture, and we will update you as we go. Madam Chair, I am finished. I'm happy to answer any questions you all may have.
I'm going to applaud your analysis. Very well done. I look forward to working with it.
Anyone else? I don't know how it go. Yeah.
Okay. Yeah. All right. Well, thank you, Madam Chair, and welcome, Kristen. I look forward to working with you, and especially with your background in governance and policies and procedures. I think it's going to be great for all of us. So appreciate you being on board, and that you are a New Mexican makes it even more special. I'm going to do two things. One is update you briefly on the Governance Committee meeting of June the 12th. And secondly, read a letter of commendation to our former Chief Investment Officer, Vince Smith, from the governor, so that it is on the record. The Governance Committee met June 12th. We discussed questions that we might have around the pay bands and the proposed pay bands, and voted to refer those or recommend them to the council for discussion and review, and to put them to vote for the August meeting. The council asks the staff, just so you understand, each year to review the pay bands to make sure that we're doing our best to be as competitive as we can be in what we're paying our current and future employees. We acknowledge the excellent and extensive research and in particular paid attention to peer-to-peer pay levels and practices across the United States, especially with organizations that have government employees, sovereign funds and pension funds and others that are similar to us. And we feel that the pay bands that we will be discussing will reflect the best possible range given the restraints that we have in the church, in the state, but also the competitive positions elsewhere. And it also will help us to attract and retain new investment and professional employees, as well as being able to bring employees that we currently have up to the same level with their peers. I want to especially thank John, Helen, the staff, Ascension, for this excellent research and work. And again, there will be discussion of it and any questions time over the until we get to the August meeting. So any questions on that update for the governance committee?
Okay. I'd like to reiterate what Kathy is saying. The staff did a great job of outlining the material and the support, and I commend it to everyone to read before the next meeting. They spent a lot of time on it, a great deal of analysis, and it's well done. And so I hope everybody takes the opportunity to read it.
Great, thank you. Thank you, Kurt. All right, if no other questions, then again, thank you to the staff. We look forward to the discussion and vote in August. I'm going to read the letter that the governor wrote to Vince. And we are sorry that he couldn't be with us here today, but he's still going through treatment, was not able to come. However, he's received this letter, and I just want to make sure that all of us hear what the governor had to say. Dear Mr. Smith, it is my honor to formally recognize your significant contributions to the state of New Mexico and to commend your service as Chief Investment Officer. With nearly 4 decades of experience in public fund investment management, you have been one of the nation's most seasoned and professional and respected leaders in this field. Since joining the New Mexico State Investment Council in 2010, your work has strengthened the organization's structure, improved its governance, and established committees. And the committee and the council have helped protect and grow one of the state's most important financial assets. Under your direction, New Mexico's permanent endowment and reserve funds expanded from $14 billion in 2010 to more than $70 billion by the end of 2025. This growth, an approximate 500% increase, has yielded substantial benefits to New Mexicans, including average annual tax savings of about $3,000 per household. This disciplined approach to portfolio management has provided stability during periods of market volatility and positioned New Mexico to become the largest sovereign wealth fund in the United States. Your work has had a measurable and lasting impact on the state and its residents. On behalf of the State Investment Council and in my capacity as governor of the state of New Mexico, I extend my sincere thanks for your service and contributions to the people of New Mexico. Sincerely, Michelle Lujan Grisham. I got a lovely letter in commentation to Vince, and I actually had a conversation last week with the chief of staff for the governor of Colorado, who was telling me how they are so jealous of our State Investment Council and the fund that we have and the kind of forward thinking that we have done as a state. So we're being noticed by many other states too for the excellence that Vince brought to us and where we are with the State Investment Council and the fund today. So that's all I have to report, Madam Chairman.
Thank you. All right. Next, we're going to move to agenda item 5.
Thank you. Madam Chair, I'll be as brief as I can. I just wanted to emphasize a couple of things. As we approach the end of June, Just wanted to remind everybody that we have an upcoming audit that is due the Wednesday before Thanksgiving. So the staff will be working very diligently on that. If you want kind of a snapshot of the main things that we work really diligently on as part of the audit, we catch up all the payments that relate to expenditures that were incurred before the end of the fiscal year to come in after the fiscal year. So we're working on those accruals. We're also catching up the 90-day lag on the private investments. That's the main thing. And then we work very diligently with DFA. There's always, because of the fee funds that we have, inflows that come in related to fiscal year 26 that come in after the fact. So we communicate with Mark Melhoff and record receivables on those. And then other than that, I just want to remind everybody we're in the process of rolling into a new fiscal year 27. And then shortly after that, due September 1st, we have appropriation request for fiscal year 28. So it's the time of the year that you have three fiscal years in motion at the same time. And it's a bit of a challenge, but I think we're really up for it. And that's all the comments I have today.
Questions for Brent?
I would just say, God bless you, because right now we're pulling our hair out because end of month and end of year is a crazy time when you're starting and beginning one side, you're ending another, and then you have these auditors asking for everything that you're still trying to figure out and work out. So great job in advance to your team, because I know this is a stressful time for them. So maybe you guys can give them the snacks that are left over from the donuts.
Thank you.
You're welcome.
All right. Any older new business before the council?
Madam Chair, I don't know if I have a minute with you. Sorry for that.
All right, Mr. Loman, do we have any public comment?
No public comment today, Madam Chair.
All right, I just want to remind everyone that we are on recess for July, the month of July, and we will meet again on August 25th here in the Cabinet Room. And with that, we're adjourned.
Thank you all. Bye.
Thank you. Bye-bye.
So happy about that right now.